mighty hand.
Okay, so I know I'm not Charleston Heston, but there are a buyer's 10 commandments when you're going to finance a home purchase. There is a certain process that needs to be taken when you're financing a home purchase. Cash buyers, well, they're fortunate. They can skip a couple steps. The rest of us, we're going to be getting a mortgage. There are certain things that you should and should not do, and we're going to cover the ones that you shouldn't do right now. Welcome to our favorite YouTube channel where we talk about Florida, the Tampa Bay area, and real estate in the Tampa Bay area. If you're interested in any or all of these, you're going to want to check on the subscribe button down below and hit that notification bell as well. We will let you know when our next video is published, which should be next Thursday. Hi, my name is Mike Lavoie. I am a realtor with Dalton Wade Real Estate here in the beautiful Tampa Bay area. My wife Paula and I have lived in the Tampa area for better than 30 years and absolutely love living here. I mean, really, what's there not to love? Some of the nicest weather you can get, no snow, no state income tax, the best beaches in the entire country, outdoor sports of all kinds that you can do all year round. I mean, really it is a great place to live, work, and play. Among other things, we really enjoy helping people with what is probably the largest single transaction they're ever going to make, buying or selling a home. So if you have ever or you're currently buying a home, you know there are certain things that have to be accomplished and in a particular order. I'm going to assume that you're planning to finance your home by the purchase. Cash buyers have a little bit easier time, so we're going to blow them off for now. First thing, get pre-approved, not pre-qualified. I have a video explaining the differences, and watch that later. After that, you go home hunting. Find the perfect home, make an offer, and wait for the seller to accept or decline that offer. That can seem like it takes for weeks. Once you have an accepted offer, you have to make escrow, start working on homeowners insurance, and supply a ton more paperwork to your mortgage company. So, really, what could go wrong? That's where the buyer's 10 commandments come in, and yes, they are pretty much carved in stone. Let's get started with commandment number 1. Thou shalt not change jobs or become self-employed. Mortgage companies want to see stability of income for everybody on the application. And a minimum of 12 months of employment is necessary to get a mortgage. So even if it means passing up a golden opportunity, wait until after you live in the house to change jobs. Commandment number 2. Thou shalt not buy a car, truck, van, or motorcycle unless you plan to live in it. Seriously, unless you're paying cash for the car, any new loan will have a huge effect on your credit rating, and more importantly, on your cash flow. The back-end ratio, or DTI, is one of the 2 ratios lenders look at when underwriting a mortgage. DTI includes mortgage applied for, other housing expenses, credit cards, child support and student loans, and auto loans. Depending on whether you are financing FHA or conventional, there is a maximum recommended DTI of 43 or 45%. If you're already stretched on DTI, a new car loan of $500 a month could put you over the recommended limit and kill the mortgage application. Now, those limits are not set in concrete, but after the real estate debacle of 2006-8 period, lenders are reluctant to raise the limits. So if the car you're driving dies, what do? Take the bus, Uber, walk. Just don't go out and buy another car until after you move into your new home. Commandment number 3. Thou shalt not use your credit card or let your payments fall behind. This goes back to the previous commandment. DTI is affected by credit card use. If you went into the process owing Visa $1,000, don't increase that amount. That's going to increase your minimum monthly payment. That could bump you over your DTI limits and will, in no doubt, raise questions about your ability to get the loan. The second part of the commandment says don't let your payments fall behind. Late payments make up around 30% of your credit score. One late payment 12 months ago could be explained. A late payment while you're in the loan process is going to raise flags all over the place. You'd be surprised how many times a week before closing, the buyer calls the loan officer to let them know that they spent $5,000 of the money they've been saving of their down payment. So commandment number 4, thou shalt not spend the money you have saved for your down payment. You've been scrimping, not going out for dinner for 3 years, letting that new motorcycle go by, saving money like there's no tomorrow to get enough money for a down payment. Why would someone spend that money on a new riding lawnmower for a house they don't even own yet? We thought we'd be able to save the money back, is what they're usually saying, but wrong. Keep the down payment in a separate savings account, checking account, or under your bed, I don't care. But don't spend it on a lawnmower, anything else for that matter. Commandment number 5, thou shalt not purchase new furniture before you close on that new home. Okay, so these are all related, but you would be impressed how many times homeowners anxious to fill up their new home with new furniture run down to Haverty's and buy furniture. New sofa, bedroom suite, kitchen table. You gotta have it sooner or later. And to take advantage of that 1 year no interest charge, they fill out a credit application. Bam, you just lowered your credit rating, increased your DTI that we talked about a minute ago, and more than likely will not get the new home to put the new furniture into. Wait until you have the house, then go buy the furniture. That leads to commandment number 6. Thou shalt not originate any new inquiries on your credit report for anything. No new gas cards, no new Haverty's or other furniture store, no new Home Depot cards. I mean, that new zero turn riding lawnmower, just have to wait. Besides, you don't have a garage to put it in anyhow. Commandment number 7, thou shalt not make any large or unusual deposits into your bank account. That should read deposits or withdrawals. Lenders want to see consistency in bank accounts during the whole underwriting process. Large, unusual deposits raise red flags and they're going to have to be accounted for. I know it sounds weird. Why would they care if your Aunt Annie M gives you $10,000 for you to deposit in your checking account? Really, they don't care. What they care about is why. Did you need that 10G as part of your down payment? If you did, why? Is it a loan? A loan increases your DTI. Remember that acronym? Is it a gift? NEM will need to sign an acknowledgement stating that it is a gift and with no strings attached, which is no big deal. It just means more paperwork and delay. It's less hassle if you just don't do it. Thou shalt not change banks or bank accounts. I mean, that's easy. Lenders like consistency. Changing banks in the middle of the process gives them an apoplexy. Getting upset about that $15 monthly charge and deciding to go down and change banks just has to wait until you move into the house. Commandment number 9, thou shalt not co-sign for anyone. My suggestion would be never co-sign for anyone, but I broke that rule with my children's student loans. So do as I say, not do as I do. Co-signing on a loan, credit card, whatever, shows up in your credit report and will increase your DTI again. And finally, commandment number 10, thou shalt not purchase anything on credit until way after closing. I know the lender just pulled your credit report when you got your pre-approval. They probably pulled it a couple times since that. I can guarantee you they will pull it again a couple of days prior to closing. So why all the checking? They want to make sure you can afford to make the payments, and any increase in debt, no matter how small, could leave you in the streets. That DTI has to remain below the restrictions we talked about earlier until after you get the keys of the house. Remember, the idea here is to get to the closing. There are a ton of things that can delay the process, if not completely derail it. If some financial issue comes up, talk to your lender, talk to your realtor, talk to your financial advisor when that issue rears its ugly head, not a day before closing. If you have any questions, comments, jot them down in the section below. I will respond. If you want to talk about real estate or real estate related issues, call or text me at 813-575-2124, and we love to talk real estate. Need more information on Tampa or the surrounding area? We have a ton of videos just like this one. Be sure to like, assuming you liked it, this video. It does help our Google algorithm and gets our videos out to the public better. Thanks for watching. Go out and make it a great day.